very warm welcome to everybody joining in for today's webinar on rethinking price pack architecture. And we have three amazing speakers today with us who will share all of their insights from the industry itself. And I'm very much looking forward to a lively discussion. Please also feel free to post any questions that might pop up during the conversation in the chat or in the Q&A section. We will try to monitor everything very diligently and then try to incorporate those questions also towards our speakers, so we have a very lively discussion. And with that, I would say we start with a very, very brief introduction just on Binomics itself. So we have the pleasure on hosting this webinar today. Personally, I'm Mario, VP Revenue at Binomics, essentially overseeing our entire go-to-market motion. And Binomics itself is a SaaS platform for holistic optimization of all revenue growth management levers, specifically pricing, promotion, PPA, and of course also mix and trade terms. And we essentially build our virtual shopper AI to support doing that. It's the core underlying intelligence, which combines multiple data sources and ultimately helps predicting and forecasting shopper behavior with greater accuracy, which then ultimately helps you improve your top line KPIs in terms of revenue, sales units, volume, and margins. With that, I don't want to speak too much about Binomics because it's really about the speakers that are joining me today. And I'm very pleased to be joined by Wido, Haja, and Ivan from Danone, ex-pladis, and FrieslandCampina. And I would say we will start the round with a very, very brief intro on PPA. And I think then we can kick it off with a short interactive element also to our audience. And then we'll jump right into the discussion. So super briefly on PPA, so just that everybody is on the same page, what exactly is price pack architecture? And I think, as mentioned before, one of the most important and most relevant RGM levers at the current state of the industry. And this is ultimately really about which products am I offering in which specific channel, and for example, what is the optimal volume per bottle that I'm offering? What should be an optimal pack size, specifically with regards to competition, utilizing typical frameworks like an OBPPC framework, for example. What are specific needs in terms of packaging that I want to incorporate? And of course, ultimately, what is the right price per pack, price per volume, and how can I optimize that with regards to my competitive offers, with regards to the needs of the shopper in the specific point of sale, and how can I ultimately have a better offering targeted to my shopper audience? I would say if we're now on the same level, without further ado, let's jump right into the first engagement piece. Jonathan, I think it's your turn to pull up the poll.
Yes, coming out of the background now and opening today's interactive element, today's poll on PPA. I'm reading this out loud for everybody joining by phone today. How would you describe your organization's current maturity in making scalable, profitable PPA decisions? First option, exploring. We're just starting to understand and discuss PPA. Second option, testing. We've launched some initiatives but lack consistency. Third option, scaling. We are applying PPA more systematically across teams. And the fourth option, integrated. PPA is embedded into RGM processes and performance trading. And the fifth option, optimized. We have fully scaled data-driven PPA strategy with proven ROI. We already have 50% of participants today answered. I'll give you 10 more seconds. So please log in what you think best describes your PPA maturity. And then I'll share the results with you and the speakers. 5, 4, 3, 2, 1. And ending the poll, sharing the results. Mario and team, would you have expected those results?
I mean, I can say from my perspective, I would say it's the usual scheme that we tend to see close to a normal distribution across the different answers, and with a tendency to the middle option here, which we like. So that's definitely something that we have also observed in the market. But I like to pass that question actually on to Haja in that case. Is it something you would also expect based on your prior work at Pladis and let's say your current overview of the CPG industry, what you've been seeing?
Maria, it's not surprising. So looking at the numbers, I think 55%, so that's 30 to 54% are testing and scaling, whereas about 14% are fully integrated and optimized. Now, notwithstanding people are being a bit modest and humble, that's about right, I would say, in the industry.
Nice. Thanks a lot. And thanks a lot, Jonathan, for pulling up that interactive element. And with that, I would say we dive into the very first initial section of our panel today, which is more on the importance and practical application of PPA. And I'd like to turn to Wido for the very first question here on how has the role of PPA involved specifically within your organization, and then why is it even more important today than it maybe was in the past years that you've been working in the industry?
Yeah, sure. Thanks for this. And yeah, it was very interesting to see this poll. And yeah, I tend to agree with Haja. There's maybe some sense of modesty among the audience as well. When the side was more tilted towards the testing, and that's also, it reflects maybe some ambition. And yes, we are in the testing phase, but yeah, we lack consistency. It means, yeah, we can improve on certain elements. And I don't have much experience as Haja has, and maybe in terms of industry, but from what I've seen, and many companies, they tend to be a bit modest as well in their achievements. In Dutch, we have a saying, and the grass with the neighbor is always greener. And so it always seems that the neighbor or the competitor is doing a better job than yourself. And so, yeah, is just some high-level intuition as I have. I think many companies are much more evolved as they think they are. So yeah, coming to this question, why is PPA important, or even more important than it used to be? And to me, the reason is that PPA is a bit the glue between the different levers as we have them. Let's say price, promo, and trade investments. But yeah, a price does not appear in a vacuum, in isolation. There's always a price for a certain product with a certain format. And I would add to that a certain occasion with a certain pack size. So in that sense, it is not so much a lever by itself almost. It is more a way how how pricing and promos and trade investment, how it is expressed. And that is where it comes together. So yeah, for one reason why I think it is more important, because yeah, there are multiple reasons. First of all, there is ever competition is always progressing. It's getting more and more fierce depending on the industry that you're in as well. But I think an important driver is simply the availability of data. It becomes more important simply because we can do more with the data as we used to have. When I grew up, I grew up with something which is called a spread mart, which is a combination of a spreadsheet and a data mart. And probably still some companies are doing that. But yeah, we are getting more and more towards automated, towards the cloud-based and data lakes. And we simply, it becomes one reason it becomes more important. And by no means it's the only reason. But one reason it becomes more important simply because we have more capabilities that we do with this.
Yeah, absolutely.
And I really like to your ideas on this as well.
Yeah, I really like your statement. The grass is always greener on the other side. We have a very similar statement in Germany as well. So maybe Ivan, can you share a scenario where you specifically chose PPA maybe over a direct price adjustment, and where you opted, let's say, specifically for that lever? However, what Wido also said, keeping in mind that it's maybe not only a PPA activity, but where something evolved from PPA. Do you have any specific examples on that?
Yeah, I think I can share an example. Generally, I think what Wido said Makes a lot of sense. I was just because thinking about how I would answer this question that is on the screen, and I think data availability is definitely one of the parts. Like it sounds interesting that in essence the companies with more data they try to answer it with they have more tools to answer the same fundamental problem. What do we do when the inflation hits, when we need to increase our profits? Very simple example, and then I think it also correlates to one of the reasons why I see PPA also is becoming more relevant today is when we think about inflation, the normal easiest way to answer inflation would be obviously to increase prices. When I'm saying easy, the easiest, obviously depending on the market, but implementing a price increase, it's somehow logical. But the problem is, depending obviously on the portfolio, if you do that several times, and that's probably linking back to my example, if you do it several times in a row, your particular price pack or particular pack, for example, could outprice not even psychological price points, but certain affordability price points. That, let's say, a typical family, they would always, I don't know, look for a dessert option, and that's basically my example. Dessert option within €1 range. If I apply to Europe, right? €1, maybe in other countries it will be $2, somewhere it will be 100 something. It doesn't matter, but there's always like this price. And after a certain number of inflation hits, your products, they essentially outprice this. So what do you do there? It was back year and a half ago. We obviously in Germany there was a couple of years of bad inflation that normally this type of inflation never happened in Germany. So we had several rounds of price increase at Danone back then. And one of the dessert products, basically Dani, which is a very, I would say, it's a childhood product for a lot of Germans because a lot of people actually grew up with that product. It outpriced key price points. So the decision or one of the options was obviously to try to price it up. But we were on the RGM side, we were really pushing to offer a more affordable, let's say, single pack, because we like had traditionally 4-pack products, single pack products to hit actually those below €1 price points. And that's just one of the examples how the PPA could be used to answer that. And I think, again, linking back to what Wido said, we could do that because of the certain capabilities, especially simulation capabilities that we could use. And like I would imagine 20 years ago, when actually I started working, it was mostly Excel. So what could you do with Excel? Not much. So that's for sure was also for us an extra hint to use PPA as a tool.
Very interesting. I think specifically very occasion-based scenarios like the one you pointed out, Ivan, on like the snacking or dessert setup definitely has a certain opportunity for PPA. Maybe pointing towards Haja here with our next question on say more of the toughest PPA challenge that you've seen and how did you overcome it? I know that you also have experience in snack confectionery business, so we're really keen to understand specifically for that part, if there's anything that you can share on, let's say, your hardest challenge on PPA that you faced in your career.
Sure, Mario. And firstly, thank you for having me here, distinguished panelists like Wido and Ivan both. You know, I agree that we are in very interesting times today, especially the kind of intersection between very high inflation. Also, the access to technology we have now, AI today, makes it very interesting what we can do with an RGM lever like PPA. I have a slightly different perspective of how I looked at RGM and PPA because my background is in CPG like Pladis, and also a retailer here in the UK leading their digital transformation. So my kind of perspective was looking at, what is the technology we can bring to this area, and how is it going to help the people who are driving a very important activity like RGM, right? And in that, the number one challenge we always faced with this kind of any initiative like that is that mindset transformation, I would say, the change management, as people would call it in organization. How do you go from doing stuff on a spreadsheet, which works, and the business is trading and it's profitable? How do you adopt new technologies, which is giving you exponential ability to work with large amounts of data, and it's no longer looking at the rearview mirror, but it's forward looking, right? That to me was always the most interesting challenge, Mario. And to add to that, when I looked at how people were doing RGM, PPA, and it varied very differently across markets, in modern markets versus, say, traditional markets, how the commercial teams approached these levers, what actually they did, the outputs and the outcomes were very different. So as a kind of a technologist in charge of the automating the solutions, my question was, what is it people are trying to do? How do we distill that? What is the outcome they are after? And what is it they're struggling with, so that we can make the change and improve both their work and the numbers. If I distill that, when people were working with pricing or promotions on pack price architecture changes, what we found by talking to numerous stakeholders is they were grappling with a lot of data. A lot of time was spent trying to come up with predictions. And the real challenge they were facing is the variability in the predictions. So they could make a change to the pack price and put it out in the market. They could even test it before putting it out in the market. The results were different each time, and that caused a lot of challenges, because people then had to explain what they did, explain why the numbers were above or below what they forecasted. And obviously that had impact on the supply chain as well, right? So how do you take somebody who is very Excel driven or using a data lake, as Wido mentioned, how do you move them from a retrospective view to a predictive or a prescriptive view, which the current technology is able to do today? And because the business is already trading, it's like trying to rebuild an aeroplane while it's flying. So you have to convince people it's safe, it works, nobody's going to be harmed, etc. So that is the toughest challenge, but it's also probably the most rewarding when you get it done.
Yeah, that makes perfect sense. And I think something that we've also seen across many of our clients and prospects is specifically how to, let's say, overcome this challenge of harmonizing data, harmonizing information, and also making it accessible to all teams, all team members, not locally, but more on a global scale, and how that can then be utilized to, let's say, solve on-the-ground challenges like a very concrete pack size change, for example, that you've been discussing. But specifically this very first step, how do you gain transparency over your existing activities, and how can you utilize that transparency to make better decisions going forward, has been a challenge in the past, at least from what we've seen also across organizations. I think we will touch on data in a bit, and I think it's the underlying foundation of our discussion all around RGM typically. But I want to focus more on the customer-facing side, and also combining that with a little bit of a profitability perspective as well, because what Wido mentioned in the beginning is that profitability and specifically pricing yourself out of the market can always be a very, let's say, interesting and of course also challenging scenarios, challenging setup. So given that we've seen situations like a shrinkflation accusation and a general inflationary environment, maybe asking you, Wido, how do you typically balance this internal pressure on KPIs to achieve those profitability targets while still maintaining the value perception to your customers? And how can you balance both?
Yeah, sure, I can add to that. And yeah, that's a crucial question. And the word shrinkflation has come quite, if you Google it, it is quite come up in recent years. Yeah, and as you say, in the end, it's a dance of, it's a whole balance between the different KPIs and objectives we have as RGM leads, which is we have to balance margin, profit with revenue, with sales growth, with market share. So that has to balance. And to add to that, it's not only for us. It's a dance, as I said. It's a joint effort with our customers, as opposed to our consumers, as the end users. So that has to balance. Yeah, and that means, and maybe I'm is just throwing some idea here, or throwing some how to say a point. In the end, it's a joint effort, but it's also a joint risk. And let's say for shrinkflation, and who is taking the risk of that? In the end, it's together with the customers as we have them. And let's say they own the relation with the consumer, and they sell the product, and they come with a story around it, and we help them with the story. It's a joint effort, but in the end, we are in this together. So yeah, having said that, there are multiple ways of doing that, and what Ivan pointed out before, yeah, it's very important to have an entry point in terms of absolute value, of absolute price point. It goes with, maybe the quantity that you go with it. It can be smaller than you have. And that will depend on the product that you have as well. I was thinking also on the previous question, for what's the toughest challenge you had? The answer is not because I don't have challenges, but the answer is because there are so many different challenges on the industry. A luxury brand has completely different challenges than of a staple, let's say, from more affordable, from more widely accessible, where you have different objectives as well. For where volume or where penetration is a more important objective than profit margin. That all depends on the industry. So yeah, there are multiple ways of doing that. But one thing I would like to pinpoint specifically, and not only because it's for my current, it's a trend that you see in many in the food industry, and that is private labeling. Private label is a great way of anticipating, of meeting consumer needs during inflationary times. On the one hand, it gives challenge to the A brands, as we all have them, but at the same time, it's an opportunity for companies who have their capability in production. And then that would be one of my answers on how to balance that. And there is no one simple answer for how to balance the margin pressure, but one element in certain industries could be private label, and that's not could be. It is something that is going on as we speak. It's huge. It's a trend. It's a trend in supermarkets these days.
Yeah, absolutely. I really love your example on private label there, because it basically translates into one of my follow-up questions that I had. And this is essentially, is there like a very strategic initiative that you would typically tie your PPA activities in general to? Like, let's say, fighting or working together with private label, working against private label, depending on your market setup. But is there something beyond that where you would say PPA is really tied to a strategic initiative, and how does it enable your global corporate strategy? Is there an example for you, Wido?
In the end, what I started, we work about the shopper trust and the retailer expectation. And in the end, with retailer, it's about joint creation of value, a joint value creation. So that is, okay, price is obviously a very important one, but it also depends, let's say, on the reliability, about the the reliability, the flow of new products, innovations, all type of innovations, understanding the category. It is not about gaining from who has the best price, but it's also about building the category together. So that's price is an element of that, but it's also about what is the occasion, and what are the new formats, helping in terms of advertising, in terms of promotion. We understand the markets. Okay, they understand the shopper, and we understand the market, the category. So that's something where there is huge an opportunity. That's basically where the whole account manager and where the customer relation is important. So yeah, there is not a specific initiative that I would like to mention here, but in the end, it's about joint value creation.
Yeah, that makes perfect sense. Maybe Ivan, do you have an example on where PPA has driven innovation specifically in your previous roles? Because I think that's a lot of times PPA is mentioned together with NPD, so new product development, for example. And while exploring, for example, different pack sizes, while exploring the occasions, how has PPA potentially helped you identifying opportunities from an innovation perspective?
Well, actually, I wanted to go a bit of a not a side way, but not a specific Danone example, but obviously something that happens in the German market some time ago. And I think what Wido mentioned several times, occasions. Just wanted to kind of also bring it up that the relevance of PPA, in my opinion, is being reflected today in more companies using PPA frameworks. For example, OBPC, that was initially used by Coke a lot. I think that was actually even developed for them. But that is starting with those occasions. But then when you identify the occasions, you can come up with smart innovations that would deliver, let's say, superior value to, well, obviously consumers and in the end to the industry. There was this interesting example that I think eventually was acquired by Nestle in German market. That's a drinkable YoFood, like kind of replacement for your food. So it was interesting. It was startup initially, but they potentially saw an occasion that was completely not taken by anyone. Replacement for your meal in a drinkable format for, I don't know, busy people, or specifically, obviously it was a bit niche. The format, how the packaging actually contributed to that, well, it's drinkable, right? So it means that it's really convenient. Secondly, it was not a chilled product, it was UHT, or it's basically ambient product. So you could essentially activate a lot of your distribution points. So it could be ubiquitous in terms of the availability. So the pack actually helped on that. And it was new, right? Because whatever they put inside, let's not debate on the quality of the content, but essentially they tapped on a very particular need state or occasion and answered that with certain particular packaging choices and the price choices. And they were charging for that superior price. I mean, I remember when we were looking at that from the Danone side, because we had in portfolio high protein based products, but the way how they were commanding this premium price was just exceptional. And well, eventually they were acquired. Kind of makes sense. I think for them it was a really nice exit. But I think that's an exactly way how this thinking of the long term, thinking about occasions, what your shoppers and consumers need, could drive you to really smart decisions that are supported by your PPA strategy.
Yeah, I think that's a great addition. And in the end, it starts, what is the occasion? And within an occasion, you can sometimes even have a new product or a new, maybe a similar product that fits a new need. In this case, let's say some kind of fee and some breakfast on the go. And actually, what is then the last, to close the loop, and this OBPC framework, and that you mentioned, I'm aware of that. And the last one is the C, which is the channel. So that's where you close it. Yes, you identify the occasion, you have the right product in the right format, but also at the right place / the right channel. And if you do that, if you have that mix right, yes, then you can ask premium, or let's say you can value-based, you can ask the price that customers are willing to pay for it at that moment, at that place. Yes.
Amazing. Yeah, thanks a lot for sharing your insights on those two topics. Let's circle back to data, because that's the fundamental enabler for our entire discussion here around PPA. Again, Haja, so from your experience, I mean, you've been working with a lot of different data providers in the past, but also different technologies, and have specified or have spent a lot of time in your career figuring out what's the best way to actually enable RGM teams. So essentially, what role from your perspective do play data-driven technologies, for example, AI, but also predictive prescriptive analytics in a standard typical PPA decision-making process?
Great question, Mario. Maybe it is kind of instructive to look at the kind of work I was doing in the last 7 years, and it will show that just the huge amount of change we are seeing in this space. So in the last 7 years, I've been involved in 2 transformations, one at a retailer and one at a CPG. 7 years ago, the problems we were trying to solve were the same around, say, RGM or merchandising. The problems were the same, but fast forward to now, 2025, the availability of data as well as the accessibility of the technology has just increased exponentially. What I mean by that is, 7 years ago, we would have built a big data science team, try to get all the data in one place, and if we actually did that in that instance, get all that data in one place and provide some dashboards to some users to make some decisions around PPA or pricing or promotion, right? Today, that I would say is table stakes, and that's how rapidly it has changed. You are expected to have that data coming in and the technology available to harmonize the data. Let's say you're bringing in Nielsen data as a sellout data, and you're bringing in another, say, Kantar, and you want to merge that with your ERP data, SAP data, or things like that, to see a harmonized view of what you actually sold, what did your competitors sell, what was the net impact, where did you take share, margin, volume. That today is table stakes. That's how it has rapidly changed, I would say. In the last 7 years, I've looked at this. Today, you are expected to take that data and to come up with accurate forward-looking projections and to be able to simulate what would happen if I made a move like this, A, B, or C, scenario test A, B, and C, and come up with what works best for the business. I'll give you a specific example. In one of the markets I was working with recently in my previous roles, it's a matured market. They had lots of access to Nielsen data. They were working on a particular snacking product and wanted to understand whether increasing the price or reducing the pack size by half an ounce would make the most sense. And they had kind of converged on 3 different options. And the best option based on the Excel simulation as well as consensus was to increase the price. At that time, we had in parallel had access to a machine learning driven tool, which had the same data, was able to model this, and came up with the conclusion, actually, that had they made that price increase, the best winner of that move would have been the competitor and a specific competitor product. And actually, people kind of woke up a bit and said, yeah, actually, we think that's what would have happened. And when they back tested the data, that's what it showed it would have happened. So they actually went with an alternate move to reduce the pack size a bit by half an ounce, adjust the price a little bit, and it actually delivered the margin and volume uplift as it was predicted. And actually, Binomics was a part of that simulation in providing the technology to be able to do that. So today, the game has changed with the technology. The data and the technology is almost like a co-pilot. You need it running smoothly in the background for people to be making smart decisions and to bring that tacit knowledge on top of the technology to make even better decisions in the marketplace.
Yeah, super insightful. One question to your example, Haja, from the audience. So thanks a lot, Emmy, for the question. How did the retailers respond to that PPA proposal that you put out in the market? Were they like appreciative of the simulations that you run, or was it rather a challenging situation in terms of communicating to them?
Matter was that to
That's to you, yeah. For
Oh,
your specific example on the PPA scenario simulations that you ran and then implemented.
but it's a good question. Actually, as I recall, my ex-colleagues tested that on a couple of markets, one in Europe and one in US. Very interestingly, when they brought the simulation to the retailer and had that discussion with them, it actually increased trust. The retailer came back with the feedback. Actually, we have not seen this level of analysis or depth gone into making this suggestion. And yes, we trust this, why not? Let's try this. The feedback from that, I remember, is that it actually made those conversations easier because it was backed by data. There was a bit of rigor, and the technology was also cutting edge. So there was a kind of a spirit of, this is much more logical and methodical compared to what we have seen before. So why not we try it? So that was a very positive response. Obviously, when the results came in, say, 6 months later, after those PPA moves have been enacted in the market, it was a lot closer to what the predictions were. So the variability got reduced, which was the goal, and that actually increased confidence in those negotiations, I would say.
Amazing. Yeah, thanks a lot for sharing, Haja. Closing it off before we jump into the Q&A, I want you to get your crystal balls out and maybe starting with Wido, asking you specifically, what do you think? How will technology and specifically AI shape the future of PPA? 1 to 2 sentences.
In the end, we will think much harder to do the things that we were doing anyway. It sounds maybe a bit, it sounds a bit like that I'm flattening out things. But in the end, I strongly believe, I do believe that, let's say, the challenges that as a companies used to have are not super different from what we're going to face in the future. Yes, we have an amazing tool, which is then all the data and all the compute power and all the simulations that we can do. But in the end, the underlying questions are still the same. And for what are the needs of our customers? How do we manage our customer? How do we manage and anticipate competitor reactions? Because that's still one thing that AI will not sort out for us. As Haja pointed out, it's like a co-pilot. And yet co-pilot is an example of AI. But in the end, the choices and the strategic, the guts, let's say the choices that we want to make, that is still a human effort. Yes, we can digitize and we can automate things, but in the end, it's still humans who have to make the choice. So in that sense, I'm kind of, skeptical is not the word, but I think it's a tool and we need to put it in perspective. But yeah, maybe I'm 50 plus and that shows off in the answer I'm giving here, but that's a bit my my take on these things.
I think it's a great conclusion, and ultimately, as you said, challenges will roughly be the same, maybe adapt slightly, but AI ultimately will enable you to make faster, better decisions on that, but not necessarily fully replace the human touch and the human decision making in between, but rather enable you, give you all of the transparency and tooling at hand to take better decisions ultimately. Cool. With that, I think we're on time to open the floor for the Q&A part. And I've monitored the chat a little bit. I think there are quite a few questions. But please feel free to also keep submitting your questions, and we'll try to address as many as possible. Maybe starting with the very first one here, which is more on the alignment between local and global teams when specifically executing PPA. Did you experience in, let's say, your past engagements any, let's say, differences or alignment needs between local and global teams, specifically when shopper behavior differs across markets?
I can take this one if you want. And yeah, from my experience, which in the end, the global team is typically more could be in the lead for the price as such. And why? Because the price, the bottom line, has with the cost of sale, has a direct impact on what the margin actually is. Then the cost of sale is pretty much independent, give and take a few things on what a final product looks like. So global team could be more in the lead of the final price, where the pack and the architecture and the format and the mix is typically a local thing. So I would suggest, it depends on the industry and many things, but other things being equal, and the PPA is more a local thing, where the price as such is more a global thing.
Yeah, that makes sense. I think always depends, of course, also on the organizational setup a little bit, so that can differ across organizations. But I think generally that's majority of what we've also been observing. Maybe thanks, Wido, and maybe switching to Ivan for another question on PPA approaches and RGM levers. So specifically in low disposable income markets, what are maybe some of those PPA approaches that you have experienced, have seen in the past outside of standard pricing?
Well, I think the most extreme example that I've seen in my life was in Nigeria for P&G Unilever. Basically, they very similar. I was mentioning the sweet price point, right? So in Nigeria specifically, it was everything below 100 naira. I can't really figure out how much it is in dollars right now, but I think I remember it was 50 cents or something at a certain point. And then the companies, to hit this price points, what they were doing is, I would call it extreme PPA. Let me put it this way. So when you downsize your product to a very tiny level, so a shampoo like a sachet that you kind of would sell, or detergent, right, would be sachet size. So they and then interesting thing how they were making that available. The small traditional trade shops, they would just have them, but basically those rolls of those kind of sachets just hanging in those shops, and then you would just buy them for this extreme low high affordability, low pack size. But that was interesting strategy that for me it was actually shocking. It was before my Danone time, when I was consulting for FMCG. Very, very interesting, I would say, approach. So definitely for countries with a low income, that is one of the ways. Obviously, the second is my understanding on a lot of the countries with a higher population, India, for example, I would assume Nigeria as well, that and what I also saw the companies were doing, obviously segmenting the population and very openly admitting that the addressable market is limited. So it's not that you are trying to sell to the whole population, but you're trying to sell only to your A class, and the A class is already could be 100 million, but then these are but then you basically intentionally cannot serve everyone else. Again, depends on the company. I guess local players could be a bit more flexible and they could serve more people, but obviously for multinationals, sometimes you have very strict margin expectations, so you cannot really go to very deep.
Yeah,
I don't know whether it answers the question, but it's just there was an example that just I had in my mind.
I think it answered for me. I hope for the audience as well. Following up on that, we have time for two more. I will pose one to you, Ivan, and then one is more, I would say, philosophical. The first one is mostly on how challenging is it to actually sell in new packs when you're not a category leader and you're not a market leader in a certain segment. Any thoughts on that?
Well, very short answer, very difficult. I mean, anything to do anything if you're not a market leader. And actually, it's interesting. We were, and I mean, the company is still, Danone, when I was working at Danone, we're in a position of being not a market leader in, for example, dairy category, yogurts, etc., in Germany. And the example of Dani that I gave, it's extremely challenging. You are not the market leader. Ehrmann is, so in the case of Germany, plus then private labels. You have at least 50% of the market private labels. You try to launch a pack that is somehow you think, okay, well, it's affordable, it's an entry pack, but then somehow the market or the consumers, they think, well, I mean, it's just another fifth pack or whatever, another news. So you actually cannot do much. Probably what I would do, and I don't think there's any universal way, is to try to make as much differentiation as possible, and sometimes maybe in very unconventional ways. Unconventional ways, saying maybe you being very creative in the channel where you place it, maybe you're very focused on particular channel and you try to execute it the best possible way. Maybe you are trying to offer something on the pricing that you cannot, that competition cannot. Maybe it's something with actual product itself. But in essence, you need to try to be unique in a certain way, and obviously not to try to be the best in everything, because you cannot. You cannot execute it better than your market leader. You cannot execute it in all the channels. But maybe you're very good at, I don't know, you launch a vending machine product specifically, right? Okay, you're limited on penetration, but then the thing is that somehow you need to build this trust with consumers. So that's a bit of my thinking, but definitely there might be different approaches, but very challenging for sure. I would say if you're not a market leader, tough.
I agree with Ivan on this one, because I think an economy textbook already a long time ago, they said, if you're number one in the market, okay, then you can lean back and enjoy, and you can have, let's say, the profit and do what you want somehow. If you're the entrant, the challenger, then you should focus on differentiation. And let's say you have some specific products, features, and that are superior to the incumbent. If you're number three, then you have to focus on costs. Then you have to be much more attractive than the other two who are already there. So that's pretty much still valid, I say. If you're not a leader, and especially if you're number three, then you need to have a sustainable cost advantage, and a cost advantage that you can sustain, so that you can offer it of a certain product more attractive than the other ones. And then the question could be, okay, what is the product? It doesn't have to be the same product. You can have a different product, a downstripped product with certain features, but that fits the same need. And even with let's say a commodity like milk, it is possible. If multiple companies are doing that, not only the one I'm working for, there are different types of milk. There's fresh milk, but there's also ultra high temperature, UHT milk. Why? It has slightly different taste, but it is much cheaper to produce and to transport. So that's something, yeah, that would be an example of a product feature that you could, certain customers of yours would be willing to downtrade on. Some people want fresh milk, but maybe on the lower, the affordable segment, some people are willing to go for that. So yes, there are opportunities, but yeah, just echoing what Ivan said, it will be very hard, and you need to be very, probably cost and price is the only lever you have.
Yeah, absolutely. Thanks a lot for sharing all of these insights specifically on such a tough question, which is just rather difficult to answer and also difficult to navigate. I think we're on time, unfortunately. I would have loved to continue the discussion, but I think there are a few follow-up questions and we'll definitely make sure to answer them offline then afterwards, after our webinar today. So thanks a lot, everybody, specifically for your engagement, and very special thanks to our three amazing panelists today. Thanks a lot for sharing your insights, navigating the different questions, both from the audience, myself. Definitely enjoyed the conversation. And yeah, rounding it up, I think PPA definitely on top of everybody's minds, and certainly something that we will keep looking into, and that will help us generate more revenue, more profits down the line, and definitely also something where data and the use of AI solutions in particular is super interesting. And with that, I can only ask you to connect with our speakers, myself via LinkedIn, if you want to know more, if you want to continue the discussion. Very happy to answer all open questions. And I think I will then hand over to Jonathan for a very brief overview of our next webinar. So what's upcoming, and then we can close off today's session.
Yes, very briefly, I posted it into the chat some minutes ago. Tariffs are a boardroom topic right now, hotly debated on social media and everywhere else. So we will have our next webinar on the topic of margin under pressure, what tariffs mean for pricing and RGM strategy. I shared the registration link in the chat right now. You will also get a follow-up email with the slides, the recording, and the invitation to exactly this webinar. And with that, I would like to thank you all, Mario, Wido, Ivan, and Haja, for this amazing and insightful discussion, and to all the attendees that joined us today. Happy to have you here. Hope to see you in the next one. And yeah, last word is for you guys.
Have a great day. Thank you so much.